So in this lesson, we're going to talk about a complete strategy for your liquidity sweep entry model. So basic knowledge, just how I've been explaining for the past few weeks, this would be your liquidity run. Why is it your liquidity run? Because it's a uptrend and you are targeting a swing high. So you're expecting a liquidity run. Now, if it's a uptrend and you're targeting your swing low, this would be a liquidity sweep, which is basically a trap. So what we're going to do in this lesson, we're going to combine both. Yes, our entry model is going to consist of both your liquidity run and your liquidity sweep. In the great scheme of things, we're targeting our macro liquidity sweep. But for our micro and our confirmation, we're going to target our liquidity run. And let me explain this. So before we get into our entry model, we need to understand the multi-time frame analysis. And I have 2 complete lessons on this topic, so we're going to go over this real quick. So on the macro, which is your higher time frame, let's say you have a swing. And this would be your macro. On the macro, you have a swing high, swing low, and price broke structure. But on the micro, what you would have here is you would have multiple swings, forming your swing high, and this would be your micro. So this is something you need to understand, which is completely simple. Before you proceed, please make sure you like the video and leave a comment. This video is completely unmonetized to make sure you guys are not interrupted by ads. So for this entry model, on the macro, what we'll be looking for is strictly this. If you're in an uptrend, you're looking at a swing high for a price to break that swing high and come back inside of the range, forming your liquidity sweep. And vice versa, if it was inverted, if it was a bearish trend, you would be looking at your swing low. So here you have your liquidity run and your liquidity sweep. So how are we going to combine these two for our perfect liquidity sweep entry model? So what we're going to do is, on the macro, we're going to focus on our sweep. So this would be our macro. Our macro swing. We're going to focus on our liquidity sweep. And on our micro, which is our lower time frame, we're going to focus on our liquidity run. So we're going to focus on this. So again, on our micro, on our lower time frames, we are focusing on our liquidity run. On our macro, our higher time frames, we're focusing on our liquidity sweep. So let's take a look at this example. So right now we are on a daily time frame, and what do we have here? We have a major break of structure. So we have a major break of structure on the daily time frame. So now we are looking for our macro. But we're looking for our macro where? We're looking for our macro right here. What is going on within these daily candles? This is what we're looking for right now. So let's find our macro. And how are we going to do this? Because a lot of people ask the question, time frame, what time frame? Think about it like this. If the ADR changes, again, if the ADR, which is your average daily range, changes from a season to a season or a year to a year, why would the time frame be stationary? Why would the time frame stay the same? So it's impossible for me to say, okay, this is NSD USD and you should take trades based on this time frame. Why? Because the ADR changes. So you need to adapt. You need to be dynamic. You need to look at price action and judge it based off what you see. So my theory here is when looking for your macro, you want to go lower and lower and lower until you start seeing structure within this area. So what we're mainly focusing on here is current price. We're not paying attention to what happened here. We're not looking at on a daily time frame where the macro trend is, because we're not trading on the seasonal trends. We're not trading based on 3-month span or 4-month span. This is not what we're trading on. We are trading on a day-to-day basis. So we're focusing on our current price action, which is this right here. And what happened recently, we had a break of structure. So this is what we're focused on right now. And so what you do is now you go lower and lower, but this is why I have the 12 hour, the 8 hour, the 6 hour, the 4 hour, 1 hour 30, and so on. Why? Because I like going lower and lower until I start seeing structure develop. So right now, as you can see here, I don't see any structure. So let's keep going lower. I'm starting to see a swing. Go lower, starting to see a better swing. So we'll probably stick between the 4 hour and the 6 hour. So what do we have here? We have a swing high and we have a swing low. So again, like we looked at previously, we had a major break of structure, which is this break of structure right here. Let's color code it purple, just for the ability to stand out. I want to thank everybody for helping this channel get to 100,000 subscribers. And as a way to give back, the next 10 users to use code ETM Army on our website will get 50% off everything on the website. So we have this major break of structure on the daily time frame. So we are bullish. We are bullish here. So what are we looking for when it comes to our liquidity sweep? Now let's remove this. What are we looking for when it comes to our liquidity sweep entry? We are looking for a stop hunt. We're looking for a stop hunt right here to continue to the upside. Why the upside? Because the overall trend is bullish. So now what do? You want to go lower and you want to see structure within these couple candles. So let's go into 1 hour. And now what are you starting to see? You're starting to see a little bit of structure. You're starting to see swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. But this is more for a seasoned trader. Again, if you're a beginner, you want to go as low as you can until you can see clear price action, something like this. So now this is our micro. So our macro here is our 4 hour. Why is it our 4 hour? Because we've seen our swing high and swing low. And on the micro, this is our structure. This is our time frame. Why? Because we can see clear structure on the 30 minutes. So in this specific case, with this specific price action, our time frame is 30 minutes and our 4 hour. And this is how you reach the conclusion of time frames. And if you want to expand on this more, make sure you check our website. When I did a whole lesson, I think I got 2 lessons on time frames. So let's wait for our liquidity sweep. Again, this is our liquidity right here. And you're starting to see structure to the bearish side. So our micro is bearish. Price is consolidating. And here you have your liquidity sweep. So what are we waiting for? We're waiting for bullish structure. We're waiting for bullish structure. But what you can see here is price did not close below. So let's wait for a close if a close does occur. Okay, so now we have a close below. So what are we waiting for now? We are waiting for bullish structure to give us that liquidity run. And my previous lesson, which was last week, it was high probability liquidity runs. And what you want to do now, you want to combine my lesson on high probability liquidity sweeps and my lesson on high probability liquidity runs, and combine both of them to get this entry. So make sure you check this lesson after you complete this lesson. So let's wait for bullish structure. We do have a little bit of bullish structure here, but this is not convincing. Let's get back inside of the range. So what do we have here? We have price rejecting from a demand zone right here. Price rejecting from this demand zone. Why is this our demand zone? Because this is our swing high and this is our swing low, and this is the bottom of that range. Just how I explained previously. Just how I explained previously in my liquidity run lesson. So if price does reject and does not break this low right here and does find rejection within this demand area, we're looking for a break above this level. And we're trading this liquidity run. So what we're doing here is we're trading our liquidity run on the lower time frame, but our macro is our liquidity sweep. If we get a rejection, if price breaks this level, then we need to look for another another entry. So it did not happen. So now let's look for another entry. What do we have here? We have a liquidity sweep on the micro. So what you could do now is you could take an entry right here. Why? Because this is our high probability liquidity run, because you have a sweep right here. So you're expecting a liquidity run right here. But in my opinion, in this case, this would be more of a lower probability trade. It's still pretty decent, but we want to see more structure, and I'll explain this in a second. So you could take an entry once price gets below here, gets above here. So you could take this trade right here, and you could already be in the trade with your stop loss below your liquidity sweep. So now the price expanded. Now you have new structure. So now you have your swing low right here, and you have your swing low right here, and you have your swing high right here. So if price does reject from this level right here, or goes for a liquidity sweep right here, and comes back and attacks this level again, you can get in your trade. Now the problem here is this is a higher probability trade, but with a larger stop loss. So looking for high probability, you give up a lot of your stop loss. And why is this a higher probability than here? Because structure is already built. Now we have a micro bullish trend. As you can see here, we have a micro bullish trend. So the fact that you have a micro bullish trend now, this is now a higher probability. When compared to here, all you had was one confirmation, which was your liquidity sweep right here. And you had a liquidity sweep here, and you had a run over your swing high. So this is why this was a lower probability trade, but your stop loss was in a better place. Your stop loss was right here. So this is what I mean by looking for the highest probability, you're sacrificing your stop loss, and vice versa. So let's see. And here you got your TP. So the basis of the strategy is if you are in a bullish macro trend, what you're waiting for obviously is your liquidity sweep to the downside to continue the trend bullish. But when it comes to our entry on the lower time frames, which is your micro, we are looking for a liquidity run. So on the macro, we're looking for a liquidity sweep, but on the micro, we're looking for a liquidity run. And in the most simplest way, before you go too deep in the strategy, what you would want your liquidity sweep to happen, and then you would want to see a bullish trend. You would want to see a swing being broken. Once that swing is broken, price comes back inside of the range. If price finds rejection inside of this range, which is your micro swing low and micro swing high, you would expect price to go for a liquidity run right here and continue bullish. So this would be the basic way. So now let's take it a step further. So let's take a look at this example. So the way we reach this conclusion of the 6-hour time frame is the same thing we did in previous examples. So there's no point of going over that again. And this is our swing high, and this is our lowest point. So this would be our swing low. And what are we waiting for? We are waiting for price to get closer to that level so we can get a liquidity sweep, which would be liquidity sweep to the bottom side and continue up. Why? Because as you can see, look at the structure of the current time frame: high, low, high, low, high, low. So we're waiting for either a continuation, or if price does struggle here, for a stop hunt to continue to the upside. So now we can see clear structure on the 1 hour. Let's see how price behaves when it gets closer to our liquidity sweep area. So this is our macro liquidity sweep. So what are we waiting for now? We are waiting for that uptrend structure on the micro. Let's get back in the range. And we are back in the range. So we have a swing low here and a swing high here, which would determine our micro range. So what are we waiting for? We are waiting for price to come back into this level, react from this level, or maybe even stop hunt, and then go for a swing high liquidity run. Now price is at this level. So now the price is at this level. If price does get to this level right here, we can expect a liquidity run to the upside. And price quickly broke through before I could even adjust my stop loss and my TP. But you can have your stop loss right here. This would be a little bit of risky just in case price comes back for a micro liquidity swing, and you can have a conservative stop loss right here. And your TP would be your first rejection point, which would be right here, which would be our premium right here. So price is already at our first TP, and your second TP could be this level right here, breaking completely outside of the range on the macro. And that's if you want to wait this long for this trade to play out. Obviously, the first TP is a lot easier and you would be in and out the trade. So here's another variation of your liquidity run. As you can see, it's a bullish trend. And what do you have here? You're targeting that swing high. So once price approaches that level and runs your liquidity, but quickly comes back in the range for a liquidity sweep, what are you waiting for? It is a bullish trend. So now you're targeting that new swing high. And once you're targeting that new swing high, once price gets above that level, you can anticipate your liquidity run. And why is that? Because of your previous liquidity sweep. So let's take a look at this example. As you can see on the macro, you have your liquidity sweep. So now let's go on the lower time frame. So what do you have here? You have an inducement phase right here, which would be your swing on the micro got taken out. So this is your double liquidity sweep. So this is a liquidity sweep on the micro and the macro. So what happens here? Just how I explained previously, you would target this high, and once price is above this high, you can get in an entry right here. Now you're in the trade. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe. And if this video hits over 1,000 likes, 5 random viewers will get the bundle course for free.